My name is Greg Liller. I'm the COO and Executive Chairman of Sierra Madre Gold Silver. Sierra Madre was a company that Alex and I and some of the other founders put together. I think we started privately about 5 years ago, 6 years ago, but our objective was always to become the next mid-tier silver producer.
Well, let's talk about that today, Greg, because you've just put out an increased measured and indicated resource number up 373%. So maybe hit me with some of the numbers and tell us a little bit about how you got there.
Well, the total indicated is around 3.8 million tons, and it's going around 7 ounces of silver per ton. That does include some bulk tonnage deposits, as I call them. The inferred is up at 4.1 million tons at 153 grams. That's a bit lower because we included 2 million tons of tailings that's just sitting there that grades 75 grams. We're doing test work right now to determine if the processing parameters for that. But no, when we took this on, First Majestic only included in their resource base the Nazareno and Colosso mines. Having run this operation in the past, I knew there was a much larger potential and much more drill holes in a lot more areas. So we basically spent, since April, actually before April's when we completed the transaction, putting together a project-wide database, bringing together some drill hole databases that Luis Saenz, my Director of Exploration and Development, and myself had from our previous involvement with the property. We recovered some assays from ALS Chemex, covering that so that we were able to get a good look at the total project resource, and hence the big difference.
Okay. Well, correct. Greg, let me say this, right? So the market for Mexican silver companies is extremely weak, okay? There's a lot of you guys. There's 90 of you guys. And I'm not sure I can sort of stomach another exploration story in a risk-off market like this with, again, significantly increased chance of failure. So I'm looking for development stories. I'm looking for near-term production stories. And last time out, we spoke about your focus, and your focus was on getting into production quickly. Has anything changed?
No.
Fantastic.
We're in the process now of fixing the mill up, changing out some pumps, doing some replumbing. We found a lot of mining equipment on site that I thought it was junk. I was in what I call a boneyard. It turned out it can be rebuilt. And so we've got we've got 2 scoops now, mining scoop trams. They look like they're brand new, and new motors. They're ready to go. We're rebuilding a jumbo. We actually have 2 jumbos. We'll get the smaller one working first. We've got, I don't know how many jack legs and stopers for the conventional underground mining. We own a mine. We're just in the process of planning how to feed it. And
okay.
That'll be our next step, is to get a mine plan out. We've got all the production records. We know how much consumption of reagents and chemicals there was, how much electrical needs were for the plant, how much AMFO was used, that's the blasting material, all the caps, wiring, everything that goes with that. We've got the entire production cost records from First Majestic. So all we need to do is just get the costs nowadays for what those materials were. We already have a union contract in place, so we know what our costs are going to be there. So it's just a matter of plugging these into a mine plan, and we need the resource first. And then I'm hoping the end of the first quarter next year, beginning of the second quarter, that we'll have a full mine plan out with reserve base. and like a lot of these projects, we don't do a PEA. We don't have to do a feasibility study because it's already built, and we've got all the cost records. We know, got a good handle on what it's going to take us capital wise to get it into production. And so, yeah, we're not going to throw out a feasibility guesstimate as far as the prices. I mean, we'll have ours nailed down a lot better than any start from scratch feasibility study could ever hope for.
Okay, so I just want to do mining for dummies, and by dummies I mean me. In terms of understanding what is it, this is a mine restart. You're positioning it as, right? Okay, so it's a case of how do I feed this thing? So the resource update and soon to be reserve says we can feed this thing. You've got the mine and the mine permits, is that right?
Oh yeah. No, everything's ready. You can turn on the switch anytime.
Okay.
But I do want to have a nice long-term mine plan so that we don't go in there and scoop out a bunch of ore and go, oh gosh, I didn't do any development.
Right.
You don't want to be in that position.
Break it down for me, okay? Because I want to keep this real simple, because I like these advanced stage projects because they're near-term revenue and therefore more likely to get funded. We've got the resource and soon to be reserved, and you'll get a mine plan. So the mine plan needs to show what? You talked about we need a development plan, but what are the other things on the list that are important?
The mine plan it gives you the sequence in which you're going to mine things. And we'll carry it out a few years, probably typically 3 years, maybe 5 years. But that then will tell you what your needs are, ongoing development, how much that's going to cost you, how much you need. Then you've got your actual direct mining costs. All that will be determined out of the mine plan. So it's basically your cookbook for running the mine for the next couple of years.
Right. Okay. So just to get, so people are kind of used to the conventional, we need to kind of go through an economic study phase, PEA, PFS, feasibility, DFS, right? So that's a way of presenting that information. A mine plan, as you're laying it out, that's your own internal figures, not independently audited or verified in any way. How do you present that to the market?
That'll be done with a third party. It'll be a combination of us and them working together. I'll bring in several consultants, QPs on this one. I'm a geologist by training. I mean, I've run mines before, but I always like to get an expert opinion on everything. But no, it's your like I said, it's like your cookbook, how you're going to make this thing work for the next 4 or 5 years. And the one thing I've seen with startup failures or startup issues is people start deviating from that cookbook right when they get in production, sometimes even before production. And it's like it's like a cookbook. It's a recipe. You don't start improvising on a recipe until you've successfully made it a couple of times, and then you can start tweaking it. But you don't change horses in the middle of the stream, I guess, middle of the river, right. However that saying goes.
Let's make one up. Whatever the saying is. Look, here's the thing. Okay, it was a mine. You got some tailings, and as I understand it, they've also, because the cut-off grades were very different back in the day, they also used some of those tailings as backfill. So you've got and then you've obviously got the hard rock to get after. So how do you kind of phase that? Is there, in a market like this, where money's tough to come by, where inflationary environment, things cost a little bit more, and let's face it, getting a mine up and running, you got it. That takes money to do, and it's got you kind of, it doesn't happen overnight, right? So how do you fund all of that? What do the next few months look like?
We've already been approached for offtake agreements, which would involve an advance payment for the rights to the offtake, sale of a royalty. You mentioned the tailings. What I find more interesting is what they call retaques that are in the old stopes. This is broken ore. Was
that the kind of backfill? Is that?
Yeah, it was stuff they mined back in the 1990s when metal price was much, much lower. They needed about a half kilo cutoff to make money. So anything that was less than a half kilo that they had to move in order to get to the high grade, they just used that to backfill the old stopes. So it's essentially broken ore that's sitting there. And I've seen various estimates, but it appears that we might have 300,000 tons of that. That can be pulled out at zero mining cost, just haulage. Maybe a little bit of development has to be done, but not much. And then haul that to the mill and do our startup testing and tweaking of the mill to get the performance of the mill up. If we can grind a bit finer, then we can get a better recovery than they historically have in the past. So First Majestic was pulling some of this just before they shut down. So we've got pretty good records on recoveries and whatnot for it. So but it's a freebie, and we can generate a cash flow as we before we start official mining.
So you potentially in terms of financing, you're looking at offtake, you've been offered royalties, etc. on this, but to kind of get the mill optimized and up and running, you could potentially take some of this. I'm calling it backfill. So what's the Mexican phrase for it?
Retaques.
So I'm going to get some of this retaques through the mill and fine tune the mill. You've also, I guess, got tailings in there as well. That is a potential revenue stream for you. Because again, the other part of what is happening out there in the marketplace is companies are raising money at ever decreasing share prices and diluting the heck out of the existing shareholders. So are you saying potentially this is a way of, I guess, future-proofing that need to dilute?
Both Alex Langer, the CEO, and I are we're two of the biggest private shareholders. I've got an awful lot of my own money in this, and we're very conscious of dilution. I don't want to see myself diluted. I don't want to see the other shareholders diluted. So if there's a way we can do this without having to dip into a lot of equity, that's the path we're taking.
Okay. So, okay. But between now and then, presumably to get to a point where you can say, we have a mine plan, which we agree, a cookbook, which we can all agree on, and we understand how much we're going to need to raise, either via offtake or royalty or not royalty. Are you going to need to raise capital to kind of get you to that decision-making point?
We're going to need about five and a half.
Okay.
US. We've already decided it is a mine. It is a mine. So we're not really at a decision point. It's just a matter of executing now.
Right. Okay. I meant sort of decision point in terms of what type of money you take on, and indeed the strategy, the Retaques type model or the tailings type model, or just go straight at it. Those decisions are yet to be made, presumably.
Yeah. We also have some broken ore in stopes that First Majestic had drilled and blasted, but didn't put it through the mill before they shut down. So
right, okay. And obviously, they're still in the picture here. In the sense of a significant major shareholder, and they took it all in shares. Again, I assume you're talking to them regularly, and you're not considering that a major overhang. No, they're not going to be selling out from under you.
No, they've. I think they're looking to dividend it out to their shareholder base,
right,
over time. There's no indication that it wouldn't be to their benefit to sell right now.
Okay.
They believe in the property too. The management does believe in the property too. So
right, and I think we talked last time out about resale restrictions, etc., in place to prevent anything like that happening. Okay, cool. So if I look at the Mexican, I referred to at the beginning, the Mexican silver companies are really struggling here, really, really early. Which you're talking about being a near-term producer, which is attractive. In terms of the types of companies which are more likely to succeed than not, you've been working in Mexico for like 30 plus years. What have you learned along the way?
I'm an exploration geologist by training, and like I said, I've been there working in Mexico since '93. There's always a lot of companies around kicking tires with high hopes and dreams. But the reality of it is maybe one prospect out of a million becomes a mine. By the time you get down to the stage where see a fair number of drill holes into it, let's just say 20 or more, you're looking at least 1,000. One out of 1,000 then becomes a mine. So no, the odds of building a mine they're against you. So and they always are. You just have to have a good eye and be selective. The advantage that we have is we already own a mine. It's already developed. I mean, there's been Guitar, I'm not sure how many kilometers, it's around 40 kilometers of development and workings have been driven there. Colosso Nazareno, there's another 12. That's a significant amount of money. I mean, start multiplying a kilometer by $1,000 and, it's development we don't have to do. It's already been done. The plant's already built. Its nameplate's probably around 500 tons per day, with the bottleneck there being the ball mills. But to build something like that today, you're looking at $50 million in reality. We don't have to spend any of that money. So it's just, this is a very unique opportunity. And I think our resource study now shows the scale of things. I mean, we tripled the resource, more than tripled, almost quadrupled it without drilling a single drill hole. There was a real savings for our shareholders too.
Time and money on the mill for sure. In terms of the scale though, in terms of, okay, nameplate is one thing. How do you kind of push those boundaries? If you're going to do an offtake, say for instance, you got money kind of flowing in, how do you increase the scale of the mill here? Because there's lots of ways you can do it, right? Yeah.
The bottleneck right now is the ball mills. We have 3 that are functional, and we can get 500 nominally. You could probably push it a bit more than that. So how do we scale that up? If we can get a finer crush product going to those ball mills, you get more production than out of the ball mills. The other option is to buy a new ball mill. I've already sourced one that's about $410,000 US, 13 by 8 ball mill, and that'll basically give you around 450 tons a day. That's with a 450 horsepower motor. It's not bad. We do have a fourth ball mill that's broken, but it costs almost $380,000 to repair, and it only does about 78 tons a day. So why bother when you can get something new like this and put that into place? So that would kind of alleviate that bottleneck. The next one would be the crushing circuit, and we're going to have to look at our options there. But perhaps we have a modular unit outside and use that to crush the ore as it comes out. That way we could get a better blending product going into the mill, but it's a finer product coming in. Right now, nominal 10-inch is what the old feed was coming out of the mine. If you can knock that down to 4 inches or 3 inches, then the feed coming out of the next jaw is even finer. It goes into the screen plant. You get a finer product coming out of the screen plant. So we're looking at options to do that. The flotation circuit's probably good for 850 tons a day. The guy that we've hired to get everything up in running shape, he ran the plant before the shutdown. He figures he can do some replumbing and increase the efficiencies of the plant, so that might be good for 1,000. That's a work in progress and a study in progress. We'll probably address some of this in the mine plan, but no. How do we tweak this thing? How do we get it up to 1,000 tons a day at minimal capital cost? That's what our focus is right now. But we've got the resource base to last for, 1,000 tons a day. That's 150,000 tons, a little over that per year. We got 3.8 million tons in indicated. So, even if you can apply conversion factors, but that's a long time. by demonstrating this resource base, then you can go, all right, how big can we get this? How quickly can we scale it up? Because our objective is to hit that mid-tier, and the bars keep moving on that. But you want to be about 2 million ounces a year of silver equivalent production. And I'd also like to add that we're a silver gold mine. We're not a base metal mines masquerading as a silver equivalent mine. And so, no, we're pure precious metals weighted towards the silver end of it.
Right. Okay. So just one last thing is, I understand the model, what you're trying to do, how close you are, and how you finance things. So it's comforting. Certainly in the context of what else is going on in Mexico. But let me ask you this question about Mexico, which is, people are slightly nervous about what the Mexican government is trying to do. Is what they're trying to do fair and reasonable, in the sense that the reforms are meant to be for the benefit of the country? Are they onerous? Should they put people off? Should the market be nervous of Mexico, or is this? Do you feel it's more sort of broader equities, risk off kind of story?
The mining reform actually has not taken effect. There's some question if it was even done in a constitutional manner. The Morena party pushed this through in a secret ballot location where the other parties could not participate. So no, this is something that's going to be decided by the judiciary as to whether this was done legally or not. Are they onerous? Even if they are, no, because we have pre-existing concessions. We're pre-existing operation, and even the president of Mexico has said this does not apply to pre-existing operations, which technically by NAFTA, and I forget what the other most recent trade agreement was, you can't do this sort of thing. You can't do stuff retroactively. So there's an issue there. There's other segments of the economy, energy production, that there's some issues there that have gone to international arbitration. So some of this might just be a kind of tit for tat pushback. But no, is the risk in Mexico any greater than the risk in the U.S.? No, the permitting risk in the U.S. is there's a reason why in '93 I swore I'd never work in the U.S. again. I did once and kicked myself because it was the same thing all over again. So no, you got your permitting risks. BC, God, you never know what they're going to do. No offense to my Vancouver colleagues, but they change every few years the goalposts there. So no, the risk is, every place has its risk. Right now, it's just a general lack of interest in the equities because you can finally get 5.5% on your money just sitting there in a CD or a bank account. So that sucked a lot of the putt money out. I think the novelty of that'll get over, and then people will want to try for the high risk, high reward type investments again. But right now, we can get this into production for very little money, and so I guess that's the biggest difference between Sierra Madre and these other projects is we already have a mine. It's just now a matter of getting a plan and putting it back into production.